Hello, 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 everyone. Welcome to another community live stream event. Happy Thursday to all of you. I hope you and yours are having a great week so far. I hope you and yours are in good health. And I hope you're ready for today's session. Welcome to all of you that were able to make it today. Really looking forward, as always. Always thrilled, always excited, always very hyped to be with you, community, during these community events. These events give us the opportunity to talk about our industry, discuss about how our industry works, how it operates, look at it from a satellite view where we have a broader view and understanding of the business cycles, the boom and bust cycles, better known as the bull cycles and the bear markets, and also understand the challenges we face in the industry, understand how these challenges can be turned into opportunities and how these opportunities can be turned into real world use cases within an ecosystem, within our ecosystem specifically. And usually that's how we zoom in and then we compare the industry, its opportunities, and then we highlight how we are dealing with those opportunities and how we are implementing those opportunities and how these aspects set us apart from the overall market, from the overall industry. With that said, once more, welcome community as you're coming in. Really looking forward to another community event with you. We have a lot to cover today. As you see, today's topic is blockchain technology, the new digital economy. It's here to stay. It's not going anywhere. So it's time to look at it in more details and have a better understanding of what we're faced with, what we're looking forward to, and how that all of this reflects on our ecosystem. With that said, as always, you know the drill. I'd like to come and check on you, acknowledge you, see who is here. And then we'll get to the topic, today's session. And after that, we'll go full circle, get back to you again. And as we're going through your feedbacks, your questions, we'll go through our day 59, our Twitter challenge that we have. So these challenges are amazing for us. They're really highlighting us on a very competitive space, which is the Twitter space, or better known as X nowadays. So it's a great platform to be active on. So this gives us an opportunity to really bring awareness to our industry and also, of course, to our ecosystem. With that said, let me come acknowledge you, community, check on you, who is here, and then we have a lot to cover, so we can go from there and get straight to the point. I see here my great brother Theo. Greetings, my great brother Steve, great dearest Mama Wino, and the entire amazing BULLRUN family. Can't wait to soak in all the wisdom, information, and gems our awesome founder will be sharing with us. Beautifully said, my great brother Theo. Always a pleasure seeing you in the community. Thank you for your positive energy, your leadership as a community member, and just your presence. It's really amazing having you in the community. Thank you for your feedback. He says, furthermore, let's go, hyping the community, getting us ready for today's session. My great brother Demo is here as well. Good day, brother Steve. This is an interesting topic for today. Let's go. Absolutely. This is a topic that we haven't really broken down and really highlighted and get a better understanding of it. And of course, it involves us. We are in this ecosystem. We're using this technology. So it's in our best interest to really understand it, understand how it operates. And of course, we're not going to the nitty-gritty technologies and technicalities. We're going to look at it from a bird's eyes view, so that we have a broad and general understanding of what it's here to do. Then we'll pick it from there and really make examples and take it from there. But yes, really great topic today. My great brother Thembi is here as well. Greetings, Steve, and the rest of the BULLRUN community. I am strapped in and ready for yet another amazing session. Success is all we know. Let's go. Always a pleasure having you in the community as well. Thank you very much for feedback. And yeah, Absolutely. So am I. Welcome, Sergio. Welcome to the community. Did I miss anything? There's a lot of libraries. We have a lot of materials, so don't worry. There's a lot of videos on YouTube. If you follow us on our Twitter space, on our Twitter or Telegram, you'll be up to speed in no time. We have a lot of information about our ecosystem, so please feel free to join our social medias, and we welcome you to the community. It's a pleasure having you here. Please, Steve, make us rich. I see your enthusiasm, Sergio. Welcome to the community. It's a pleasure having you here. Isn't this what we all want to be, right? My great brother Glenn. Greetings, everyone. Hello, brother Steve. Greetings back to you, my great brother Glenn. Always a pleasure having you in the community as well. Queen Goleba says greetings. Suits you to you, Mr. Steve. My lovely Mama Wino and my beautiful family. Time to listen attentively. Thank you for your warm welcome. We welcome you as well, Queen Goleba. Always a pleasure having you within our ecosystem, within our community. Thank you for your presence. Your contributions is very much appreciated. We have my brother Glenn here, motivating and hyping the community, encouraging them to get ready for today's session. We have Queen Val. Hello, BULLRUN family. Hello, Mr. Steve. Happy Thursday. Glad to see you all here today. It's a pleasure seeing you here today as well. And as always, you're very consistent. Thank you for your contributions and all that you do, your leadership in the community as well, Queen Val. We have Queen Grace here as well. Hello, Mr. Steve. Thank you for your dedication towards educating us. We so much appreciate you. Thank you so much, Queen Grace. It's a pleasure. Thank you for your kind words. I can only give it back to you as well. It's a pleasure having you with us in the community as well. Your presence, your enthusiasm, your energy, your leadership is also very much appreciated. We have Queen Cozy here as well. Greetings, greetings, family. Greetings, families. Greetings back to you as well, Queen Cozy. Always a pleasure seeing you here, having you here with us. We have Queen Martha here as well. Good evening, BULLRUN family. Hello, Mr. Steve, Queen Mother Wino. Let's go. Always a pleasure seeing you around, Queen Martha. Thank you for your presence. I see Sergio says he is already part of it. Great, great, great. Nice having you here. And it's a pleasure that you joined in today's session. So hopefully there'll be a lot of takeaways that you can take away from today. Welcome, Sergio. We are honored having you here with us in this in our community. Queen Cozy says, greetings, BULLRUN family. Always a pleasure having you here as well. Greetings back to you as well. I see my great brother Crypto Riser. Hello, BRL family. I'm glad to make it here today for another informative education from our Professor Steve. Let's go. It's always a pleasure seeing you around, brother Riser. It's always a pleasure having you around. You're an amazing artist. You create beautiful banners along with Queen Val and also my brother Thembi as well, and everybody else that's contributing to it. Queen Mother Win, of course, as well, putting it together and displaying it beautifully on our Twitter pages. So it's a team effort, it's a community effort. So thanks all of you for all the efforts, all the hard work you put in. You're all very, very much appreciated. Queen Nancy is here as well. Good evening, Steve. Hello, BRL community. So excited to be here. I'm looking forward to another educative session. As always, let's go, community. Let's all hit the like button. It's always a pleasure having you here, Queen Nancy. Thank you for your presence. Thank you for your positive energy, your leadership. Always a pleasure having you here as well. And yes, let's engage with the like button as it triggers the algorithm, as we know. Queen Mother Aweno herself. Greetings, BULLRUN family. Hope you are all doing great and in good spirits. Hello, Steve. Looking forward to another exciting educational session. Always a pleasure. Thank you so much for gracing us with your presence, your leadership, your examples that you set for us all. We are very grateful and thankful for your presence and your leadership. Thank you so much. Queen Cozy says, greetings family, hoping everyone is well and excited. Looking forward to an amazing and educational session. So are we. We are very looking forward to it. Thank you so much for your input. And my brother Abdullah, of course, as well, warm greetings to you all. Greetings back to you as well. We want to thank you also for your presence, your leadership, and your consistency. Thank you so much, my brother. And of course, we see here Queen Val already went ahead and put the BULLRUN Telegram group for those that are new, that are not aware or not part of our ecosystem yet. Please feel free to join us on our Telegram group, or do your research. Start from the website where you can find our social media accounts such as Twitter, Telegram, and YouTube. And we have a large library of information. Education plays a major role for us in our ecosystem, and we believe that that is the gateway to mainstream adaptation is education. So we stress on that highly. Here is another link to Killer Whale website. As you know, we have 3 community tokens, and we have BULLRUN, we have Survivor, and Killer Whale. So these are the links to the Telegram and the websites. Thank you very much, Queen Val, for displaying them here for us. You'll also find the Survivor link shortly here as well. So with that said, let's get to today's topic, as we have a lot to unpack. And once again, welcome to all of you that were able to make it today. It's always a pleasure having you here with us, and we are very grateful. So with that said, let me see what Brother Theo says here. My great brother Theo says, family, let's be sure to hit that like button. Absolutely, let's engage with it. So with that said, let me share my screen and let's get this ball rolling. Bear with me. So, beautiful. As always, let's always start with the market briefly. I know all our eyes are glued here. We spend a lot of time just looking at the charts, looking at the markets, the indicators. So I'm not going to spend a lot of time here. We are down 2% for the day, but still we are close to 2.7 trillion market cap. Keep in mind, 2.7 trillion in the total market cap. Keep in mind, 3 trillion was the all-time high at the last bull run cycle. And it's just amazing to see how we're achieving these numbers way before Bitcoin halving. Like, we are still a month away from the Bitcoin halving, and we're already hitting these all-time highs. And this really translates the greed. You know, you see how greedy the market is. The fear and greed index, as we know, the markets are led by emotions, mainly fear and greed. And this is how the markets are being dictated. When the market is healthy, it's greedy. And when the market is in red, it's in fear. So it's very, emotions drive the markets. And this is another reason why we stress on education, because if you're educated, you can really move around and you can get your emotions in check, and you're not led by FUD, so-called fear, uncertainty, and doubt, but you are aware of what you get yourself involved with. You are aware of a broader market, of the broader industry, how it works, the cycles, the challenges, the opportunities, and then of course you can zoom in to our ecosystem and also have an overall, general, and detailed understanding of what added value we bring into the industry. And this will help you with your emotions, to keep your emotions in check. As we see here, Bitcoin is between 70,000 and 73,000, going up and down. The reason of this actually is because the numbers came out today, and the inflation is actually still high based on the Fed's numbers. So the interest rate cuts seem to be prolonged due to that, because there's no point of starting to cut interest rates when inflation is actually still high. So this, of course, spooked the market, shook some people which, like we just discussed, brought some fear to the market, and some people just took profits as these cryptocurrencies are actually hitting all-time highs already. So we're in the all-time highs already. So there's nothing wrong with taking shedding some gains, taking some gains as they hit all-time highs already. And also what we see is how they're being distributed. The way the cycles work is it always starts with the Bitcoin bull run. And believe it or not, even though Bitcoin has way surpassed its all-time high, and even as we speak, it's still above the all-time high of the last bull cycle, it always kickstarts. It hasn't even started yet. The real Bitcoin bull run is still yet to come. It will be kicked off with the halving, but then it will be triggered fully as the interest rates being cut, and the real liquidity is really entering into the market. And that's the real trigger of the bull cycles. Liquidity plays a major role in triggering the bull run, or actually stopping the bull run and starting the bear market. So liquidity dictates boom and bust cycles. Always keep that in mind. With that said, community, like we say, today's topic is blockchain technology, and that this technology is the new digital economy. It's very important to understand this, and really I'm looking forward to this session today and how we can go about this and really discuss in detail just what this is all about. What is blockchain and how is it the new digital economy? And then also, of course, we're going to zoom in and then highlight how our ecosystem is equipped to take full advantage of this technology. The whole idea, let me set the stage here. The whole idea of today's session is to have a grasp, have a good understanding of what the blockchain technology is. It's really more simple than we think, and we're going to look at it in very simple terms, and we'll have illustrations, we'll really have great examples, real world use cases. We'll look at some and have a great understanding of what blockchain technology is, its fundamentals, what it was here to do in the first place. And then of course we'll zoom in and then highlight how that translates to our ecosystem, how we take full advantage of it, and how we are prepared for this bull cycle as we are prepared for it. Also, the question of the day is, we'll understand, and I brought up this question last community event, but it was on on Twitter Space. So I'm bringing it today again. Today we're going to highlight, like we say, the blockchain is about technology. It's the technology, and we're going to highlight those who are really here for the technology, or here just for the hype and for just a quick fix. We're going to look at both parties, and then I'll let you make the decision. So with that said, community, let's get right into it. Today we're going to understand what blockchain is, how it works, and how it can be used. We'll look at a few use cases for it. I'm not going to bore you with details and a lot of texts. I'm just going to skim through it and give you a great overall understanding, so that we can set a base on which that we can build upon throughout this session. So let's kickstart. What is blockchain? This is a very, very great question. What is actually a blockchain? Everybody talks about blockchain, Bitcoin, but what really is it? In its essence, a blockchain is actually a distributed database. It's a distributed ledger, which is actually shared among multiple computers and nodes, which are also known as nodes across the globe. They are best known for their crucial role in cryptocurrency systems for maintaining a secure and decentralized record of transactions. So in its essence, it's a global and transparent ledger. Usually ledgers are used for accounting purposes, where you account for your transactions. Usually they're centralized, and every institution has their own individual ledger. But the breakthrough with the blockchain technology is now this is a public global ledger where everybody can trace it and look it up, verify it, trust but verify. And this is the essence of a blockchain technology. It's a global, universal, public ledger that is accessible to anyone, and everybody can trace it, track it, see it, and verify it. But they are not limited to cryptocurrencies use alone. They can also be used to make data in any industry immutable. What does immutable mean? The term used to describe the inability to be altered. This is the beauty of things. You can't change anything. Once a transaction goes through, it's final, and you can't alter it. That's the beauty of it. It's legit, it's solid, it's verifiable, and that's what really makes a blockchain so unique. This is another thing. Because there is no way to change a block, the only trust needed is at the point where a user or program enters data. That's it. This aspect reduces the need for trusted third parties. I really need us to understand. This just shows the essence, the fundamentals, the ethos of blockchain technology is exactly this sentence. It reduces, rather, it eliminates the need for trusted third parties, which are usually auditors or other humans that add costs and make mistakes. So we don't have to deal with all of that. So since Bitcoin's introduction in 2009, blockchain uses have exploded via creation of various cryptocurrencies, of course, DeFi, known as decentralized finance applications, and also non-fungible tokens, or better known as NFTs, and smart contracts. So in a nutshell, this is what the blockchain technology is all about. But let's look at some more nuggets here, just briefly. Yes, some key takeaways here. It says blockchain is a type of shared database that differs from a typical database in the way that it stores information. Blockchain store data in blocks linked together via cryptography. So this is like what we just discussed. I'd like us to look at some key facts here that are really interesting. Let's look at it here. Right here. Okay, let's start from here. We always talk about decentralization and how it plays a core. It's a core value, and it plays a major role in the blockchain technology. And this is highlighted here again. Blockchain decentralization. So a blockchain allows the data in a database to be spread out among several networks, just like we discussed, computers or devices running software for the blockchain at various locations across the globe. This not only creates redundancy, but maintains the fidelity of the data. This is a fancy word of just it retains the originality, the originality of the data, the purity of the data. For example, if someone tries to alter a record to one instance of the database, the other nodes would prevent it from happening. That's the best thing about it. This way, no single node within the network can alter information that is held within it, like we just discussed. This is what makes this global digital ledger extremely unique, and it sets the blockchain technology completely apart as an asset class, because it's for the first time in human history, it's something that everybody can verify and participate on. And let's go further and look at more things here. Another thing that we look at the blockchain technology is, like we just discussed, it's its transparency. So we just looked at its decentralization. Now it's transparency. Because of the decentralized nature of Bitcoin blockchain, and keep in mind, you'll always see Bitcoin and blockchain coexisting. You can't talk about the blockchain technology and mute out Bitcoin, because Bitcoin is the grandfather and the foundation of the blockchain technology. It's actually the first cryptocurrency that applies the technology, the underlying technology. Keep in mind, this doesn't mean that Bitcoin is all and be all. Because after Bitcoin, as we know, Ethereum came, Binance came, Solana, Avalanche, so many other blockchains that are more sophisticated, faster, cheaper, and that you can actually develop smart contracts on. So only because it's the first one, we have to give it credit for that. It kicked open all these doors and opportunities for us. But that's the beauty of technology. It's upon us to take it to where we need it to go. It's upon us to develop it. And we'll get to this further, the difference, because the underlying technology, everybody has the same technology and uses this very same underlying technology. But what sets these cryptocurrencies apart, as we will notice and we'll get into details at the end of this, is strategies, mechanisms, tokenomics. Those are the difference makers within ecosystems. But the underlying technology, as we see, is the same for every single cryptocurrency. There's no difference. So like we say, transparency plays a major role here. All transactions can be transparently viewed by either having your personal node, if you are part of mining Bitcoin, or you can use the blockchain explorer that allow anyone to see transactions occurring live. As we know, the blockchain explorer like this, we all can verify. You can put in your favorite token and then you can follow up. You'll see how many holders you have, how many tokens are still here. You'll be able to check the holders, how many tokens are they holding. You have the info about the project. You also see the smart contract that you can verify. You can go through it and verify it. So this is the block explorer. It has a lot of basic information and also detailed information. You can track transactions. You can really go into so much details with this, and this is what it's meant here. This is what this is all saying, that this is the beauty of this blockchain technology. It's a ledger that you can trace and it's transparent. Let's look at for another one. Security. Security, of course, is very important, and Bitcoin works on a proof of work, so they have to mine to secure the network. But we are on Ethereum, which is on a proof of stake, so you have to stake, basically put your money where your mouth is, and put your tokens, put your chips, so to speak, at stake to secure the network. Those are the two different networks that we're using right now. Mainly it's the proof of stake is the majority, besides Bitcoin and Dogecoin, which are on a proof of work network. Majority of the blockchains are proof of stake. So what else is here interesting? Another thing that we really need to just briefly highlight, the blockchain technology itself was actually first outlined back in 1991 already, and it took over almost 2 decades, actually, which was in 2009 that Satoshi Nakamoto wrote his white paper and referred to it as a new electronic cash system that's fully peer-to-peer. And here we go again, community, with what? No trusted third parties. This is the second time we are reading this. No trusted third party. It's the second time we are reading this now. So this just shows you the ethos of the blockchain technology. And sadly to say, even Bitcoin, its founder was all about peer-to-peer. I can transfer funds from me to you, and there is no trusted third party in between. Unfortunately, how things are unfolding currently, this is not the case anymore, because right now, as we know, ETFs are going rampant, and we'll get into that shortly. Let's not get ahead of ourselves. So like I said, we read it here again, no trusted third parties. That's the difference between the Bitcoin and actually the blockchain technology. It's important to understand that the founder of Bitcoin, his goal was to remain decentralized and also no third parties in between. Unfortunately, the vision of the founder of Bitcoin, I bet he is scratching himself and he's like, where did I go wrong? Because now it's the opposite. Bitcoin is mainly led and actually governed, not governed, but it's liquidity is controlled fully, central by third parties, and we'll look at that in more details. Now, blockchain. Let's now look at what blockchain is. Blockchain can be used to immutably record and number of data points. So we understood that immutable just means that you can't alter it, you can't change it. Once it's through, and it's confirmed. You can't change anything. So this could be this could be in the form of transactions, votes in an election, product inventories, state identifications for your local governments, deeds to your homes, and so much more. So basically, blockchain has so many use cases, and there's so much upside potential still that we can still look forward to. This blockchain technology, like I said, it's here to stay. It's not going anywhere. It is so much more efficient, so much more sustainable, transparent, things that we don't have currently in the real world. And everybody can participate in it. Like, unlike the internet, you can't be part of the internet as far as like you can't buy internet and be part of the internet community. But with the blockchain technology, you can literally buy Bitcoin as a technology. You can buy Ethereum as a technology. You can actually buy like BULLRUN or Survivor, or Killer Whale, and be part of a community and actively participate within that community, within that network, within that using that technology. So this is completely different from the internet. This is a whole other level. So another thing that we should look at, blockchain and banks. Okay, so blockchain have been looked at as very disruptive forces in the financial sector, especially with the payments and banking sectors. However, banks and decentralized blockchains are completely different, as we know. And let's look at the differences. Like the differences between blockchain and banks, for example, if we look at opening hours, the typical, first of all, the bank, you have to physically go there. It's a physical place that you can go and visit. And typically it's a brick and mortar, and it's open from 9 to 5, only on weekdays. Some exceptions are open for Saturday only until noon, but all banks are closed during the banking holidays. Now, if you look at the blockchain technology, it's open 24/7, 365. So any time of the day, holidays, weekdays, no matter what time, it's open for you. And that's the beauty of the blockchain technology. If we look at transactions, current transactions are through major centralized payment systems such as Visa and MasterCard, or even checks. Do you remember checks? It's not used anymore, at least not, I don't know who still is using checks. But the bottom line is that these all come with fees, with major fees. And on the blockchain, of course, unless you're using Bitcoin or Ethereum, which still, compared to the competitors, still have relatively high gas fees. However, if you compare them, for example, to Binance, Solana, and other layer 2 blockchains, Ethereum layer 2 blockchains, it's way cheaper than your centralized competitors, which is between $1 up to $30 just for checks. And if you want to transfer your funds, you pay up to $3 for just sending internal from one account to the next. If you want to do an outgoing domestic wire transfer, is $25. International transfer, $45. So you see that the cost can really accumulate quickly. Also, the speed, of course, is something very important. If you look at the real world, it can take you up to 48 hours just for a payment, your credit card to go through. Checks take even up to 72 hours, which is like 3 days. If you do transfers, wire transfers can be done within 24 hours, but they have to be within business hours. And if they're international, it takes even longer. Bitcoin, however, or the blockchain technology, transactions can take for Bitcoin up to 15 minutes. But of course, if it's Ethereum, it takes a few minutes. And if it's like on Binance or on Solana or layer 2 blockchain, it takes seconds. It's a matter of seconds. So you see how the speed is here. It's much faster. Fees are much cheaper. It's open 24/7. I believe you get the idea. One last thing also here is that know your customer. These are the rules in order to open your bank account. You need to show your government ID. You need to go through regulatory compliances. You have to basically feed them with your private informations and details and to identify yourself before you can actually open a bank account. The beautiful thing with Bitcoin or blockchain technology is that you don't need all of that. You can just download the app of your favorite wallet, decentralized wallet, be it Trust Wallet or be it, for example, MetaMask. And if you're sophisticated and security conscious, you will even go further and pick Ledger, a cold wallet, or Trezor, or Tangible, or there are so many others that you can pick that you don't need to show or do your KYCs and give all your personal and private information to a centralized entity that will turn around and monetize your information. So all of that is not, you don't have to go through all that hustle using the blockchain technology. Also, the ease of transfer. This is beautiful because if you want to transfer funds, first of all, you need a government issued ID, you need a bank account, and then you need a mobile phone at least, and the internet access, of course. But if you do that on chain, you don't have, nobody cares about your government ID. All you need is a solid internet connection and your mobile phone. That's it. And you're ready to transfer funds back and forth, peer-to-peer, with no centralized entity in between. Privacy, of course, is another thing. Like we said, for a bank account, all the informations are stored in a central bank. And if they get hacked, your privacy is in jeopardy. And all your information is exposed, is out there for the public to see if it might get hacked or anything. But it's out there. With the blockchain technology, all you have is for one, you have your public address, which is basically like your account, so that we can transact. I can send you funds, you can send me funds, but you have your seed phrases, which are actually just yours to keep these secret, hide them, write them in separate ways, and keep them for yourself. And it's private. All we see is numbers and digits. I mean, digits and alphabets, a string of numbers and alphabets. That's all we see. We don't know who that address belongs to. We don't have to. You don't have to go through all the KYCs and all that. So privacy is the next very important thing. Security, we discussed this already. We saw how secure the network is, either through proof of work. That's how you secure the network, through different nodes, computer softwares, or proof of stake, where you also run nodes through computer softwares, but mainly you stake. You take your tokens and you stake them to secure the network. And the more people stake, the more secure and the more stable the network is. And this is why you incentivize those who put their money where their mouth is, and you have to incentivize these individuals. We'll get to that further down as we progress. Of course, approving transactions. This is the main thing here. Imagine the funds you worked so hard for. You have to rely on a third party. You're at their mercy. They reserve the right to deny transactions for any reason, and also they reserve the right to freeze your accounts with no notice whatsoever. And if they notice that anything is unusual, or maybe you changed your name, you got married or something, if you're a woman and your name changed, or if you finally got that doctor title and your name changed, it's simple little things like that can cause your account to be frozen and your assets to be out of your reach. This is not the case on the blockchain technology. It's as long as it's in your decentralized wallet. This is why we always stress on decentralization, because if you have them on Binance, on Coinbase, or any other centralized exchange, you'll experience the same thing that we just saw here. So anything centralized, you're in trouble. But if it's decentralized, you're in good hands, because they are your seed phrases. It's your bank account. You have control over it. You can transfer it any day of the week, even during holidays. Nobody can stop it. It's irreversible, and it's immutable, borderless, and you get the idea. So account seizures as well, So we can go on and on, but I believe you get the idea. You get the idea of what's happening here, and I think we really understand what's going on. Final touches here, just final words here. Banking and finance. So if you look at industries and you compare the market caps in trillions of dollars, there is no industry that has more trillions of dollars than the finance and banking system. This is where the money really is. And no surprise that this industry stands to benefit from integrating blockchains. This is why you see the JP Morgans, the Morgan Stanleys, and the asset managers like BlackRock and all of them. You see payment systems such as Visa, MasterCard, PayPal. You see all of these infrastructures, even such as SWIFT. They all are joining the blockchain technology, because their operations will be so much smoother, more efficient, etc., etc. So financial institutions only operate during business hours, like we saw, usually 5 days a week. That means if you try to deposit, for example, a check on a Friday, 6 p.m., it will not reach there until Monday. You'll have to wait until Monday morning. Okay, so these are the drawbacks of the banking systems right now. Some of the drawbacks that we just looked at that will be different once they deploy on the blockchain. So these are the major differences and attributes that we see. So like we say, by integrating blockchain into banks, consumers might see their transactions processed in minutes or seconds. This is exactly what we were discussing. The time it takes to add a block to blockchain, exactly, regardless of holiday or the time of the week. So it doesn't matter, With the blockchain, banks also have the opportunity to exchange funds between institutions much, much more faster and securely. Because right now, even interbank transfers take days, up to 3 days. With the blockchain technology, it takes minutes, if not seconds. So it's way faster. Another thing is the currency, of course. Blockchain forms the bedrock for cryptocurrencies like Bitcoin and many other currencies. Nowadays, there's Ethereum, there's Binance, there is Solana, and so on and so forth. There's so many different cryptocurrencies. There's BULLRUN, of course, Survivor, Killer Whale, and the current US dollar, of course, is under the centralized authority system, where your users, your data, and currency are technically at the whim of their bank, like we just discussed. They can freeze your account, they can close them, they can do whatever they want to do, and there's nothing you can do about it. What else is important here? Exactly. This is another very beautiful thing. With the blockchain technology, you can use your wallet, your DeFi wallet, as your savings account or as the means of payment, especially for those without a state identification or the bankless, the unbanked, So these are the benefits that we're looking at, that are the benefits of the blockchain technology. Another use case, let's look at 2 more use cases here. The healthcare industry, for example. You can use the blockchain to store patients' medical records securely, instead of just leaving them out there, archiving them physically or on a centralized ledger. You can store them on the blockchain, and they can basically tie their wallets or their addresses directly to their own information, and they can use the blockchain technology to approve or give access to the doctors globally, wherever they are, whenever they want, only for that, for a short period of time, for example. So when a medical record is generated and signed, it can be written into the blockchain, which provides patients with the proof of confidence that the record cannot be changed. So these are just some use cases that we can use. So there's still so much potential and for the blockchain technology. Of course, you can do the same thing with properties. Okay, you can do the same thing with the land, real estate, arts, whatever property that you have. And this is exactly where we're heading. RWAs, real world assets. These are the things that are being tokenized. These are the things that Larry Fink is talking about all day long, how he wants to tokenize everything and bring it on chain. And this is exactly what this is all about. Of course, smart contracts. Smart contracts, one thing I want to mention about smart contracts here is the beauty of smart contract is that you customize a code, you generate a code and program it, and it can be built into the blockchain to facilitate a contract agreement. This is why it's important that we have our smart contracts audited, because this is so you can verify, you can see, okay, what does this contract actually do? What does this smart contract actually execute? How does it work? And you can verify it. That's the beauty of blockchain. You don't have to trust. You can go and verify yourself. And audits usually break down in simple terms what the smart contract is all about and what it executes. And this is very important. And this is the next gen thing. You have an agreement, a smart contract that executes on exactly what it's told to execute upon. So you can customize something, and using the challenges, for example, like we did, we observed the challenges in the industry. We observed the challenges that certain cryptocurrencies experienced. We then customized this smart contract in a way that it's addressing these challenges. But we'll get into all of that further down the road. So smart contracts play a major role again. Exactly. For example, these are real world use case. For example, this is the last one before we move on. With smart contracts, for example, if a landlord would like to lease an apartment using a smart contract, so the landlord agrees to give the tenant the door code to the apartment as soon as the tenant pays the security deposit. So all this can be done on chain. So the door is there's like a card that key card you can use, and once the deposit is done, is executed, it activates the key card for you to access the apartment. There's so much use cases for this technology, and it's just unbelievable that there's so much room for growth still. Another thing is supply chain. Supply chain is another thing. You can, for example, currently there's a lot of food poisoning, for example, and there are ways now where you don't have to trust the suppliers. You can actually add those commodities or those assets, such as rice or beans or tea, and you can put them on chain, and it can be tracked as throughout the supply chain, from being harvested to processed, and then going through the supply chain of logistics, etc. And we're not going to get into details. There's just so many use cases on the blockchain. Voting is another thing, of course. It can be done so much cleaner. Voting with blockchain carries the potential to eliminate election fraud and boost voter turnouts. And they won't even have to physically be there. They have their own address that they can vote upon based on who they want to vote for, and, for example, send a specific token to the person they want to vote for. It's traceable, trackable, verifiable. It's on a ledger that everybody can verify. There won't be no use for physical counting or all that. So there's so many use cases on the blockchain. That's it. let's stop there because we can go all day long. I believe you get the idea. The takeaway here, community, is that the blockchain technology is here to stay. It's not going anywhere. As a matter of fact, we are nowhere yet. As you see, some use cases in healthcare, logistics, voting, there's so many things that we still have not even addressed. And even in the financial industry, the banking and finance industry, which we are in DeFi, there's so much room for growth, and so on and so forth. So this technology is here to stay. It's not going anywhere. And that's the bottom line. That's the takeaway. And if you understand that this is a cutting edge technology, okay, it's a new digital economy, it's an emerging market with so much potential, so much growth, and it's the fastest growing asset class. And what we are going through right now, it's literally a wealth generating machine. The blockchain technology is a wealth generating machine. We are at early stages, and you can develop and customize something using the technology, the smart contracts, to enable it to achieve things in ways that your competitors have not thought about it. So what the takeaway here is that the underlying technology is here for everyone to use. Everyone that is using the blockchain technology has the same base fundamental technology. What sets us apart are the tokenomics, the mechanisms, the strategies, and how we customize and how we develop the smart contracts. That's what sets us apart if it comes to smart contracts, strategies, tokenomics, mechanisms, ecosystems. That's what we really stand out, and we'll get into details. It's time to zoom out, community. Now that we've understood the importance of a blockchain technology, what it's here to do, we read multiple times that third parties, at least Satoshi Nakamoto, the founder of Bitcoin, or the entity, whatever who Satoshi is, their vision was not to have central entities in between. It was for us to fully be decentralized, have full control of our assets, be our own bank, have full control over our seed phrases, of our keys, and remain decentralized. That is key. That was the whole purpose of the blockchain technology. That was actually the original idea of Bitcoin in the first place. But with time, that mythos got lost along the way. And this is where we are today. ETFs came along, exchange traded funds. These are traded funds on the stock market. These are traditional financial products that are in the financial markets. And right now, why am I showing you this right now? It's just ridiculous how within 2 months, ETFs are closing in on 5% of the total Bitcoin supply. This is unbelievable. And within such a short period. And it's the most liquid asset. If you want liquidity for Bitcoin, you have to get yourself ETFs. And this is a shame. Truth be told, it's a slap in our faces as an industry, because this just shows inefficiency of Bitcoin. And we'll get into technicalities. And like we said, the underlying technology is the same for everyone. But where people struggle, or where people set themselves apart, is when it comes to tokenomics, efficiency, sustainability, and all these fundamentals. That's when projects, ecosystems set themselves apart. So Bitcoin dropped the ball here on us. Let's just call it how it is. And we see that ETFs are holding close to 5% of the total Bitcoin supply, and they have liquidity of 71 billion within 2 months. They've accumulated close to 72 billion in liquidity. Just to put it in perspective, we are sitting at a pathetic 1 billion or 1.2 billion in liquidity in 15 years. And here comes Wall Street and schools us and shows us how it's done, and shows us the importance of liquidity. Without liquidity, there won't be no adoption. Without liquidity, there won't be we can't live out what the mythos, what Satoshi Nakamoto intended for Bitcoin to be truly decentralized, we will rely on centralized entities such as this for our liquidity. Is this how it was supposed to be? Of course not. We are supposed to accumulate our own liquidity, keep it decentralized, and have the trading volumes that are skyrocketing here. In one day alone, $1 billion inflow. That was 2 days ago. Today is the 14th. March 12th. That was on Tuesday. 1 billion in inflow. This is in liquidity. So we see here, we have 1 billion in 15 years, and ETFs are just casually accumulating $1 billion in one day. So they're matching Bitcoin's liquidity in one single business day. So from 9 to 5, between 9 to 5, within those 8 hours, they accumulated $1 billion in liquidity, and Bitcoin is sitting here after 15 years at 1.2 billion. Community, this just shows you the importance of efficiency. You have to be efficient. Liquidity is the most important aspect in an economy, and if you don't retain it, you'll lose it. And liquidity goes hand in hand with volume, and we'll see it shortly. So 1 billion in one day inflows. This is just unbelievable. What does that mean if you generate 1 billion within 8 hours in inflow, in liquidity? This brings in a bunch of revenue for the ETFs. How do these asset managers generate revenue? Through transactions. Transactions are king. Transactions are everything. Without transactions, there's nothing you can do. And you will never have transactions in the first place if you don't have liquidity. With liquidity triggers transactions, and transactions triggers volume, and volume triggers revenue or distributions, whatever you want to call it. So this is a very basic and fundamental strategy in order to be stable and sustainable, is by accumulating liquidity. This is the game plan here. Accumulate liquidity. Within 2 months, they have 71 times more liquidity than Bitcoin community put together in 15 years. This is sad. So, and then now they hit $1 billion within 8 hours, within a day, in liquidity. It took them 8 hours to hit $1 billion in liquidity. Bitcoin is still stuck at $1 billion in 15 years, like we said. Now they are racking in a bunch of revenue, a bunch of distributions to their shareholders, or their investors. So it goes right back to their pockets and their shareholders' pockets. And Bitcoin is losing out. This is not going to the Bitcoin community. This is going to the shareholders of these centralized institutions. And this is how liquidity is being drained from Bitcoin community. And here they are talking about how they're focusing on technology, how Satoshi is the greatest person, and we were supposed to follow his vision by being decentralized, being our own banks, believing in the technology of the blockchain and Bitcoin and so on and so forth. But what triggers them is the price going up, not the fundamentals. And this is the sad thing, though. So this is the most important chart of the day. If you have anything taken, if there's any takeaway today, is this chart right here. This is accumulative Bitcoin ETF volume. What did we say? If you have liquidity, you see how they have 71 billion in liquidity. This gives you volume. Liquidity and volume go hand in hand. Now let's look at it. When it starts, they started trading on January 11th. Right? They had a modest volume of 4.5 billion. Now, currently, this is daily volume, just in one day. So yesterday, they had a volume of 127, close to 128 billion in volume. That's just one single day. what are you telling us, Steve? Let's look at this. Let's put this in perspective. First of all, before we leave here, the more liquidity ETFs are accumulating, what are you realizing? What's happening? The more liquidity is being accumulated, the more volume is being, the more the daily volume increases. What you need to understand is that liquidity brings volume. The more liquidity you generate, you accumulate, you retain, the higher your trading volume. It goes hand in hand. And this is exactly the game plan here. Okay? This is the game plan here. Is accumulate liquidity, step one. Once you accumulated liquidity, you start hitting inflows, which is volume. Liquidity is coming in. Once you hit volume, you start generating distributions for yourself and for the community. And once you accomplish that, the volume just keeps rising over time. And right now, within 2 months, ETFs are sitting at 128 billion. I'm curious how much it was today. 128 billion in one day. Now, let's put this in perspective. Keep in mind, 128 billion in one day. Okay, let's look at CoinMarketCap. If we look at CoinMarketCap, we see the largest cryptocurrency that has been around for 15 years. Look at its daily volume today. It's a modest 51 billion. So ETFs are currently, if you do the math, have 5 times more volume than a cryptocurrency that is the largest one in the industry and that has been around for 15 years. It took a liquid asset because they focus on what? They focus on liquidity. And liquidity allowed them to increase in volume. The more liquidity they retain, the higher their volume. This is the most important chart for us community. Let me bookmark this even. This is the most important chart for all of us. It just proves that if you retain liquidity, you don't have to worry about volume. It will just keep skyrocketing. Naturally, organically, will just keep going up. Keep all this in mind because we'll summarize all of this. So that's the whole point, community. And this is also the reason why you see how the blockchain technology, Bitcoin specifically, regardless of its inefficiency, it still took it less than around 12 years to hit $1 trillion in market cap, regardless of its inefficiency. It only took it 12 years in comparison to Microsoft, 44 years, Apple, 42 years, Amazon, 24, and Google, 21 years. So regardless of the inefficiency of the blockchain technology itself, of Bitcoin technology itself, it still took it only 12 years to hit $1 trillion. So imagine how much faster would it had reached this number being fully efficient. We'll look at all of this shortly. So this is the importance, okay? Bitcoin is still the fastest asset to reach $1 trillion market. It's the fastest growing market. It's a wealth generating machine. The Bitcoin blockchain technology is. If you know all of this and you understand what we've just discussed for the last hour, don't you think it's important for you to pay attention on the technology and not just the hype? You have to pay attention of the technology. And like we discussed, the underlying technology of everyone is the same. Now, what you need to pay attention is the underlying tokenomics, fundamentals, strategies, mechanisms, ecosystem. That's where cryptocurrencies set themselves apart. And that's where we set ourselves apart. And we'll get into that shortly. Let's move on to really highlight even more the power of blockchain technology. It's the best performing asset, period. It performs better than US Treasury bills that gives you 5% annually. It performs better than the oldest money commodity in the world, which is gold. It outperforms US real estate. It outperforms US S&P stock markets. And it even outperforms NASDAQ, the tech stock market. And it does this in spades. The longer it takes, between 2 to 10 years, the more it outperforms. And this is regardless of Bitcoin being inefficient, Bitcoin being inflationary, Bitcoin not retaining any liquidity and not issuing any distributions to its those who are staking. Keep in mind, Bitcoin, you can stake it. It's a proof of work, so you have to mine it, use computational power to do it. But the bottom line is that despite its inefficiency, Bitcoin outperforms anything. It's the best performing asset. If we know this, if we understand the importance of blockchain, its potential, its growth that is still coming, it's an emerging market, it's the fastest growing industry, it outperforms any asset class. How much more important is it for you to pay attention that you have something that is efficient, that is sustainable, that addresses challenges in this space? That just shows you, this should wake you up and let you know that we need to start being smart, because smart money has entered the space. Smart money is in town, community, and they're busy accumulating liquidity, and they are busy stacking up on volume, and they are busy making a bank. They're laughing all the way to the bank, while Bitcoiners are losing out on liquidity. So let's not do the same mistake. Let's move on. Another thing I want us to look at that is part of this blockchain technology is, especially on the Ethereum side, because we're on the Ethereum side, it's a proof of stake. We are staking. Staking is a whole new industry, and staking plays a major role. Like we saw, it's used to secure the network. The more is staked, the more secure and the more stable the network is. Why am I showing you this? This is a brand new project that just came out, and it's a liquid staking project. And it's the latest. It's using the latest technology. And right now, there are two things that I just want to highlight. It's ironic right now. Two things that this latest restaking or staking platform does. First of all, it allows staking participants to hold their keys. This is not usual, because if you look at Lido, for example, one of the largest staking platforms, let's look at it. Let's look at staking. Let's look at the staking industry. The staking industry is still so young. There's only 39 billion in market cap. So it's a very young industry. And as you see here, the largest one is Lido, for example. And Lido and every other restaking platform, you have to give them your keys, basically, because they stake on your behalf. You don't have control over your assets, your tokens. And what did we read here multiple times? We read that the most important thing here is that there is no third party, right? Wasn't this the whole idea? Is that there is no third party? And this is what sets Bitcoin apart. And the blockchain technology is that you're your own, you're taking advantage. It's decentralized, okay? And this is the whole idea. You want to have full control over your tokens, and you don't want to have your tokens frozen. You don't want to be victim of a centralized institution that can hold your assets, freeze your assets. And Satoshi's vision was to not have a trusted third party in between. Okay, all this went south with Bitcoin. So Bitcoin is compromised because those who are dominating Bitcoin right now are centralized. They're just 10 institutions, asset managers, and they have the deepest liquidity. and they have the highest volume that keeps increasing, and they're making a bunch, billions of dollars a month in revenue, keeping away the liquidity from Bitcoin. Okay, now let's move on here. What I want to show you here is the first thing, they allow individuals to be able to hold their own wallets, be decentralized. So that's a good thing. Another thing that is important here that I want to show you is this. They added something called value accrual mechanism. Let me ask you directly, community, does this sound familiar? If not, let's move forward. What is value? What do they mean with value accrual mechanism? The DAO buys and locks the tokens using protocol revenue. Does this ring a bell now? This is the latest staking platform now. It allows the users to retain their own keys, which we already have. Obviously, everybody has their own MetaMask wallet or Trust wallet, and they have full control over their tokens. But now they're also adding a DAO that does buys, and it's locking these tokens using protocol revenue. Does this sound familiar, community? Does this sound familiar? We've been doing this for over a year already. We've been doing buybacks and lockups using our 10% we put aside. Why am I showing you this? It's because technology is picking up. Smart money has entered the blockchain's technology. This is basic. This is how you should do it. But they just stopped at this. All they do is they do it on a protocol level. That's it. We're doing it on 4 different levels, 3 to be specific, and 2 times on a protocol level. We go beyond just doing it on a protocol level. Look how we are doing it. This is the protocol level, okay? This is the protocol that all it does is buybacks and locking up the tokens through staking. But we also do it on a smart contract level. This is the smart contract level, which does this automatically, which it does bans, right? It bans tokens, it removes tokens, and depreciates, makes the token scarce. So this is on a smart contract level. What it does is, we started with 1 million in total supply, right? And now we are down to 972. Actually, let me refresh it. We are down to 971,800. So what we do is, we are not tied and locked down on a protocol level alone. We're doing it on a protocol level, like we just showed, yes, here. But we're now also doing it on a smart contract level, which you can, of course, verify on Etherscan. You see that, yes, the supply is shrinking. And then we're also doing it on another smart contract level, which is our #1 wallet here. It's a smart contract. It's a staking contract. And it's locked up close to 58% of the total supply, which is over 562,000, almost 563,000 total supply, which represents, like I said, almost 58% of the total supply is also being locked away on a smart contract level. So we have 2 ways that we lock away tokens on a smart contract level: by decreasing the total supply and by locking away through staking. So what they do just on a protocol level, we do 2 of them. We do it on a protocol level, and we do 2 more things on a smart contract level. Actually, 3 things. We do the banning on a smart contract level. We retain liquidity. That's on a smart contract level. And then we accumulate USDC distributions. This is another smart contract. This is the 3rd smart contract that we have. This is you see here, it's a smart contract, staking contract. And what we do here is we accumulate USDC distributions, and this will go to, this is not going to, where is it? You see how once they generate all these inflows, this billion in volume, and once they generate a lot of volume because the liquidity keeps increasing, this doesn't go to the community. And that's the difference with us. This goes to the community. And this is what sets us apart. We give back to the community. And because we do this, the newcomers, the traders can not reluctantly, they can confidently keep trading, knowing that those who are holding the token are not planning on selling anytime soon, because they're being fed distributions that they can accumulate just by holding the token. And these individuals that are staking are actually benefiting from the traders. So it's a win-win for the traders and for the holders, because the traders are also benefiting because the holders are not selling on them, are not using them as exit liquidity, because the protocol using the smart contract is already accumulating liquidity for them. Why is liquidity? All right, hello community. I hope you hear me. I hope you hear me now. Let me know. Sorry about that. So what I was explaining. Oh, thanks, Cryptorizer. Yes, what I was explaining here, I'm not sure where I stopped. But what I was explaining here passionately was how important liquidity is, because if you have liquidity, and this is the strategy of ETFs, once they have accumulated enough liquidity, what happened is that their volume just skyrocketed. The more liquidity they brought in, like we see here, in one day, just on Tuesday alone, they brought in $1 billion in liquidity. So the more liquidity they pile up, the larger the volume becomes naturally, organically. So this is when you hear us talking about how important it is for us to retain liquidity, and this is what we need. This is all we need. We'll get back to this. Let me finish making my point here. The point I was trying to make here is that you didn't hear me. This volume here, it's sitting at 128 billion as of yesterday. ETFs are 2 months old, and they're already sitting at a daily volume of 128 billion. To be fair, we have to compare apples to apples, meaning a liquid asset with another liquid asset. So we can't compare such a liquid asset, such as ETFs. ETFs are liquidity aggregators. That's a fancy word of saying it creates a pool where if you want to trade a certain asset, in this case, Bitcoin, they are the go-to pool, liquidity pool, that you go and trade that specific asset. And within 2 months, they've accumulated close to 72 billion in liquidity, whereas Bitcoin is sitting at a pathetic 1 billion after 15 years. So we are being schooled here by smart money. Smart money understands the power of liquidity. If you have liquidity, you make the rules. And they're literally making rules here. And while they're making these rules, they're laughing all the way to the bank. They're generating billions in revenue on a monthly basis. So let's compare this 128 billion to the market. And we have to be fair and compare it with the most liquid asset in the crypto industry. This is a USDT. This is the most liquid asset. And it only sits at, and let's round it up, it sits at 106 billion in volume, right? And we just saw, and this is after 6 years. Tether has been around since 2018. So in 6 years, they reached a peak of 106 billion today, currently. And it took smart money 2 months to hit 127. So within 2 months, these liquidity aggregators have accumulated or are being able to trade 128 billion every single day. Do you imagine how much liquidity that Bitcoin is missing out on right now? 1 billion a day, and this is just within 2 months. And the more there'll be more and more liquidity coming in, because pension funds are still not in, banks are still not in, retirements, all these plans are still not even factored in. So this is going to just snowball, just like we said. If once you hit a certain level of liquidity, volume just keeps increasing. And if you tie the volume directly, like we did, we tied volume directly to retaining even more liquidity, burning even more tokens, and adding even accumulating even more USDC distributions. This is really how you have a solid and sustainable ecosystem. And this is the whole reason why, this is the bottom line of this session today. If you understand how the blockchain technology works, what it was intended to do in the first place, and how it underlies how Satoshi Nakamoto aimed that there is no trusted third parties should be there. We should be fully decentralized. You and I should be holding our own. We should holding our own assets. We should be our own banks. But this got lost along the way because the inefficiency of Bitcoin, the smart contract, like we were looking at smart contracts, it's not designed to accumulate liquidity. And this is how Bitcoin ETFs came into play and accumulated all the liquidity and are now the champions and are now literally dominating Bitcoin. Everybody that wants to buy Bitcoin is going through ETFs because they have the deepest liquidity period. And this amount just keeps increasing. Within 2 months, ETFs have a higher volume than our largest and the most liquid asset, which is USDC stablecoin. I mean, USDT stablecoin, which has a volume of 106 billion. ETFs have 128 billion. So it's way more than USDT, which has been around for 6 years. ETFs have been around for 2 months, but already have a higher trading volume because they have extreme liquidity. Bottom line is liquidity, family. Liquidity is key. It's very important. And now this is just for you to understand why we stress on accumulating liquidity, because once we accomplish that and we reach a certain level of liquidity, this is going to happen. Our volume will just start ballooning and it will not stop. Once it's in full effect, it will not stop. It will just keep rising, just like we're looking at it right now. And it will keep going up. And because, like we identified, the underlying technology is the same for everyone. What sets us apart, like we said, is the tokenomics, the fundamentals, the mechanisms, the strategies. And our strategy is to tie the volume, which will increase as our liquidity increases, directly to our liquidity. So meaning we'll accumulate even more liquidity. We'll burn even more tokens and shrink our supply. So this will keep shrinking. We'll keep locking up more tokens in 3 different ways, like we identified. Remember how we saw here that this latest high-tech staking platform is using their DAO to buy and lock up tokens using the protocol revenue. They're doing it on a protocol level, like we identified. We are doing it on a smart contract level right here. We are doing it on a protocol level. And now the best part, we are doing it on a community level, like through the bulldozer. This is when you, the community, comes in now. The distributions that you receive in USDC, it's up to the community now what you want to do with it. You can apply the same mechanism like our protocol level, buyback and lockup. You can do it the same thing. Only this time, it's not the protocol locking it up. It's you locking it up. So you're actually adding to your position. And you're doing 2 things. You're generating volume and you're adding liquidity while you are enhancing your position in the staking pool as well. So what do we want to show you here is that within the shortest period, ETFs are the most liquid, and naturally, if you're the most liquid, you also you have the most volume naturally. So this is just to show you that this 128 billion in volume should have been Bitcoin. But Bitcoin right now has only 52 billion in volume because they're illiquid. They are not liquid. And this shows here they're really illiquid. So this is Bitcoin was supposed to be the one with 128 billion. They were supposed to be not just the largest cryptocurrency in the space, but they were also supposed to actually have the highest volume naturally. And this is why ETFs, it took them 2 months. And even though they're not the largest based on market cap, but they're already having the highest volume because due to their highest liquidity, they're extremely liquid. I think I rest my case. I think the point is made and we all understand why liquidity is important. And this is what sets us apart in the industry, because we are getting into this bull cycle that is getting ready to flood us with serious liquidity. Once the interest rates get cut, the Fed start printing the money and funds start being distributed in the ecosystem. We are about to experience something like we've never experienced before. Like we said here, the blockchain industry, cryptocurrencies are the best performing assets. Once the money printer is on, guess where it's coming? It's not going to US treasuries. It's not going to gold. It's not going to real estate, and it's not going to the stock market. I'm not saying zero is going to these, but the majority is coming to the blockchain technology. That's where all these funds, once the money is printed, is going to come to. So having that in mind, don't you think you should be part of an ecosystem that is developed and customized through a smart contract to accumulate that liquidity that is being flooded and thrown at us? Don't you think we should stay away from the inflationary nature of our current fiat system? and actually build a customized smart contract that actually bans the tokens and removes them from the total supply, don't you think as a staking platform that is a cutting edge technology and that is the new frontier and a whole new industry, don't you think that we should have a staking platform that is sustainable, that gives the individual access to their own assets and they holds their own accounts, and that there is a platform that is actually going above and beyond just the protocol level of locking up to buying tokens and locking them up, but is going above and beyond the protocol level, but also does it on a smart contract level by banning tokens, and also on a smart contract level by staking them and locking them away on a staking platform. So if it comes to fundamentals, there is no competition out here. If it comes to the underlying technology, everybody is equal. We all use the same technology. We looked at the blockchain technology at the beginning. Everybody uses the same technology. What sets us apart, though, are the mechanisms we have in place, the tokenomics, the fundamentals. And this is where we shine. This is where we set ourselves apart. And this is why we'll make the most out of this money generating machine called the blockchain technology. There's so much room for growth. We looked at the medical fields, the healthcare fields, the logistics. There's so many, the real estate industry, the properties industry. There's still a lot of liquidity that is about to enter the space, and we'll be busy accumulating it. And what happens if you retain liquidity? What happens? This happens, community. Along with the liquidity comes volume, and it will skyrocket. So we won't just have the deepest liquidity, we'll have the highest volume in the industry. Because, and the beautiful thing about all of this, we'll keep it all decentralized. This is what Satoshi Nakamoto was all about. Peer-to-peer, fully peer-to-peer, and no trusted third party. A lot of people have lost their way along the way. They don't understand the purpose of blockchain, the purpose of decentralization, the true meaning of not having a trusted third party in between. Why? Because you should be your own bank. You should have full control over your own assets. You should have full control over your own identity. This is what blockchain technology is all about. And this is what our ecosystem is all about and represents, is that we want to be a decentralized staking platform that is scarce and that is sustainable and that accumulates liquidity along the way. It will be the most traded asset in the history of blockchain and DeFi. And this is where we are heading. And because we tied the volume directly to adding even more liquidity, to banning even more tokens and being even more scarce, and we tied it also to staking platform so that you'll even stake even more and lock away even more tokens. And because we did that not only on the smart contract level, but on a protocol level, that we also buy back and lock away tokens, just like this latest and hottest staking platform that just came out and that will be listed on Binance, by the way. We go above and beyond. We do more than what they are doing. We don't stop at the protocol level. We have it also on our smart contract level, and also as a bulldozer on a community level as well. We tick all the boxes. So if it comes to fundamentals, if it comes to supply fundamentals, sustainability, efficiency, deflationary, scarcity, stability, all of that, there's no competition out here. And we can say that with confidence. And also, we understand the concept of smart money. Smart money came in with 2 months ago. They already have the deepest liquidity. While they have the deepest liquidity, by the way, they also have the highest volume. By the way, they also generate the most volume. They generate the most fee, and they keep it to themselves and their shareholders. And they're locking out Bitcoin from all that fun. Bitcoin was supposed to be the one with billions, hundreds of billions, if not a trillion by now in liquidity. Bitcoin is supposed to be the one with 128 billion in daily volume. But guess what? They're not. And there will never be, because smart money is in town now and everybody's moving to ETFs. So we are doing the same thing right now, but we are keeping it decentralized. This is why we're not going anywhere outside of Uniswap. We want to keep it all in DeFi. We want to keep it all within our own ecosystem. And the more liquidity we accumulate, the higher our volume will be. The higher our volume is, the more liquidity will accumulate, the more tokens will burn from the total supply, and the more USDC distributions the community will get. Let's move forward. I don't like to call it meme coins. I like to call it community tokens. We're not going to go through the whole text. The takeaway here is that community tokens are driving not just the Ethereum network, but are driving every network, Solana, layer 2 networks. Everybody pays attention to community tokens. They are the future. Remember when we started in 2024, January 1st, we said that 2024 was to be a year of community tokens. And what did it happen? Exactly that is what's happening, right? Everywhere you go, you see community tokens frenzy. Every blockchain you go to Avalanche, go to Ethereum, go to Solana. What you'll see are community tokens. They're the ones who bring in volume, who bring in liquidity. So a downfall, the saddest part about these community tokens is they're not built to last. They're built for the hype. They're built for the season, but they're not built for the long term. They're not built to sustain. They don't follow the principles or fundamentals of sustainability and longevity. They don't understand smart money's moves. Retain liquidity. Once you retain liquidity, you get volume, right? You get volume, you get liquidity. Once you do that, you gain volume, trading volume. Once you get trading volume, you cash out, you get revenue, right? Same concept, but we seem to be the only ones doing that. Retain liquidity, generate volume. Once you have volume, add even more liquidity, burn even more tokens, and generate more distributions, accumulate more for the community. And all of this is led by community tokens. And if we look at, let's be fair, let's look at the top 100. You'll realize there are 5 community tokens. 5. The lowest ranked one is right here, Bong, 59th. And if we move further, you see Flocky. If you move a little bit, you'll see Pepe. If you go a little bit further, you'll see Shib. And then finally, you'll see Doge. So you see 5 community tokens, but none of them are built to last beyond the bull cycles. And they're not built to be scalable, and they're not built to go above and beyond. They're not following the basic fundamentals like we see here. Accumulate liquidity, get the highest trading volume, and then share the love with the community. So this is a basic concept that we've been following. Another concept is use your protocol to buy and lock up your tokens. Okay, this is something we've been doing this for over a year. These individuals are launching in 4 days on the 18th, and they're just coming up with this now. We've been having this for over a year, and we've been preaching and talking and educating about all of this. Now smart money is coming in, and they're doing the same thing, but they're doing it only on the protocol level. We're still way ahead. We're doing it on a smart contract level in addition to the protocol level, and we're also doing it on a bulldozer level, which is through you, the community. You can decide to do the same thing that our protocol does. So we see that people are catching on, and smart money has entered the space, and they're showing us the way through ETFs, through staking platforms. They're implementing technologies, strategies, mechanisms, tokenomics that we've been already applying for the last year, for over a year now. And this is beautiful, and it's really flattering to see that We're on the right track. We have something that newcomers, new technologies, new platforms, staking platforms, and ETFs, they're applying strategies we've been already applying over a year ago. So we must be doing something right. And this gives us the confidence that we were talking about at the beginning. If you're informed, if you're educated, you are inspired, and you fear, uncertainty, and doubt doesn't move you. You're not making irrational and emotional decisions based on emotions, based on fear and greed. Why? Because you're informed, you're educated, you are inspired, and you know better. And you understand that we tackle real industry issues, real industry challenges that nobody else seems to look for. Let's close out with this, community. Let's close out with this. Let's look at this. Let's pick up on Bitcoin. Let's pick on Bitcoin. You see how we were talking about emotions? Bitcoin is down to 69,000. Bitcoin didn't change its core fundamentals in the last 2 hours. It's just based on the inflation report. It's now down to 68,000. And you see how it keeps dropping. Pure emotions, pure emotions. Anyway, what I was trying to show you here, community, is that after every boom cycle, there'll be a bust cycle. And Bitcoin in particular busted 80% from its all-time high. From top to bottom was 80%. It dropped by 80%. So if this happens to the largest cryptocurrency in the space, this is why others drop 99%, even more. So our mechanisms, our tokenomics, our fundamentals were developed in a way that it avoids the massive drawback by focusing on fundamentals. The fundamentals we see smart money doing. While we're going up, we are busy accumulating liquidity, using the volume that comes along with the liquidity. Just like we see here, as you're accumulating liquidity, your volume naturally skyrockets. So as we are going up through our journey, through this bull market, we are busy accumulating liquidity. With liquidity naturally comes volume. So as we hit the tip and the peak, and the music stops, and people start dropping down to 80%, 99%. Due to our fundamentals, the music continues because we have acquired the deepest liquidity in the space, right? With the deepest liquidity naturally follows what? The highest trading volume. And once we have this highest trading volume, there's no stopping us, because we have now that positive feedback loop. We accumulate even more liquidity, we burn even more tokens, become even more scarce, right? Burning even more, becoming even less, having the total supply shrinks, the staking percentage increases, our protocol level keeps buying and locking up, our community through bulldozer effect keeps buying and locking up. And with all that, as a side effect now, as a byproduct, this is not our goal, but we can't help it. As a byproduct, we will have the highest price in the industry because our price will skyrocket. If Bitcoin, with a total supply of 21 million, right now at 19.6 million, is at 69,000, how much do you think we will be at 400,000 token supply or 450,000 token supply? We'll be way above this. And the good thing is we won't even have to hit 1 trillion. So because of our strong tokenomics, because technology, this is the question I was asking you. Are you in it for the technology, or do you just want to see the price go up? Why not having both? If you focus and pick a project with longevity, sustainability, technology, efficiency, as a byproduct. It's not our aim, but it will cause this to skyrocket naturally. It's a basic supply and demand. And if the supply is busy being locked away through protocol, through banning, through staking, and through accumulating more liquidity, what do you expect? That's just a byproduct. That's just something that happens. Oh, by the way, it's not our focus, but that's what will happen. So in the long run, as we are accumulating the deepest liquidity, we'll have the highest volume. And due to this, we will be able to ban even more tokens, remove them, shrink our supply, and we're about to do some math. We can't close out without doing some math. We need to look at some numbers. So let's look at some numbers, but let me finish my thought. So this number will keep shrinking, and we'll look at some numbers on how much it will shrink. And this number will keep increasing. We'll look up even more tokens, and so on and so forth. So we developed an ecosystem. The bottom line here is we developed an ecosystem that is the most efficient ecosystem in the space. And we're going to look at some numbers. Don't take my word for it. Verify. Let's take a calculator and let's verify. Don't believe what I'm saying. Let's verify. So let's look at some numbers. Let's close out this way. So what numbers should we use? Let's use some rookie numbers. Let's not take big league numbers because it's just not fair. It's not. Let's be humble. Let's look at some rookie numbers here. Let's look at a community token, the one with the lowest volume. Okay. Let's look at this one. Has 1 billion. It's the 59th community token. It has like a billion in volume. We don't need all that. Let's take 100 million because we just want to show how efficient our ecosystem is. So we take 10 times less what they have, 10 times less. And this is the 5th largest community token. So let's do some math, community. Let's do some math here. We're not taking 1 billion, we're taking 100 million. So if we take 100 million in volume, right? And what are we looking at right now? We want to see how much supply, first of all, that is going to shrink. By how much are we going to shrink? We are currently we banned over 28,000 tokens with literally out of a bear market and no volume whatsoever. So with 100 million in volume, let's look at that. Let's look at how much tokens will be banning. And I'm giving us a time frame of a month. That's how efficient we are. All we need is a solid month of 100 million in volume. Just 1 month, let alone the 6 to 9 months that a real bull market gives us. But we're so efficient, we're done after a month, we're good to go. The mechanics, the machine is in full flow, and that's all we need. Okay. We take that 100 million, we multiply by 1%. So that gives us 1 million. So now, what does this mean? This means that $1 million worth of BRL tokens are being banned in 1 day. This is just 1 single day. Well, what does that mean? It doesn't make any sense. Like, let's make some sense out of this. Let's multiply this by the current price. What's the BRL price right now? Let's round it up. Let's say it's 50 cents. BRL price is 50 cents right now. Okay. Fine. Let's do the math. So we have to divide this now by 50 cents. So community, you see that we have a problem here now, because right now with $1 million, we can buy 2 million BRL, but we have a problem here. We don't have 2 million tokens. We only have 971. So we have a problem. And this problem is called a supply squeeze, supply shock. You can call it however you want to call it. It means price go up. So based on our fundamentals, on the technology of what we have, We picked on the least, the last one, the fifth one with the least volume, and we took 10 times less volume of what they have. And if we buy, this is why we can't use $1 million anyway. We can't buy directly for $1 million. So we'll have to buy in tranches. We have a max. You can only buy 0.5% at a time. So we'll have to buy multiple times. We can't do a one-time buy. And each time you buy, obviously the price goes up. BULLRUN price keeps going up. So we'll have to keep dividing, okay? We'll have to keep dividing. So let's say instead of 50 cents, now we are even $10. But even then, 1 million divided by $10, we're still banning 100,000 tokens. Even if BRL was sitting at $10, in one day we would still ban 100,000 tokens, right? So one of these days, within the 30 days, will reach $10, and that will still ban 100,000 tokens. So the bottom line here is that this number is going to shrink massively and extremely fast. This is why we say all we need is a month. Actually, all we needed would even be 10 days. That's it. But let's call it a month to just 1 month. This supply is going to shrink. This number is going to increase because more tokens will be staked. On the protocol level, this 10% is going to increase because we'll be doing buybacks and lockups, and we'll create something known as a supply squeeze. And this happens once every 4 years with Bitcoin. But this will happen with every buy and sell, with every trade, as we are partaking of this massive liquidity rush known as the bull run. It will be an intense 6 to 9 months that will experience all this euphoria, will experience all this volume. And let's finish the thought here. That was for 1 day, okay? What we calculated here was just for 24 hours. Let's do for a month. We say we want it for a month. So $30 million worth of BRL tokens within a month will be banned and removed from the total supply, never to be seen again. That alone, even if let's be creative here. Let's say 1 BRL tokens is now, meanwhile, is $10,000. It will still ban 3,000 tokens. So it doesn't matter how, it will still ban so many tokens, regardless. So what we're looking at here is a very scarce supply with a solid lockup system on a contract level and on a protocol level, and that accumulates USDC distributions also on a smart contract level. And if we do the math for that as well, this also means that $1 million worth of USDC is going to be accumulated because it's also 1%. We just focus on banning, but we do more than just banning. 1% of 100 million will be $1 million. So for the community, for just holding $1 million worth of USDC, we're at 700 right now. We'll be right here for the community to be distributed to the community. So these individuals will be busy staking and receiving their USDC distributions, even beyond when the music stops and the market stops dropping 80 to 99%. We'll have established an ecosystem where nobody wants to exit because nobody wants to. You mean to tell me I can just stake and receive my USDC? And you mean to tell me that all the liquidity we've accumulated, we are now market leaders as far as volume in DeFi? Liquidity and volume is all we need for 30 days, and we'll unleash a monster in a good way that will benefit the community and that will be unstoppable. That's the bottom line, and that's the takeaway message. Don't focus on the hype. Yes, it is true. Community tokens are the dominant ones, but focus on those that have strong fundamentals, that focus on technology, that uses the latest technology, that will go beyond the boom cycle. Because after the music stops, everybody's will lose 80 to 99%. Is your ecosystem developed and built to go beyond the bull cycle? Ask yourself that question. Is it built to be burning a bunch of tokens on its way up and decreasing its total supply? Is it built to, once the music stops, to still give you distributions beyond the bull cycle? If that's the case, then you shouldn't worry about the 80 to 99% going down, because this only happens because a run on the bank, a run on the liquidity. There is not enough liquidity in these projects. And this is why once the whales start selling, or the smart money starts selling, there is a, what did we see here? How is this ecosystem, how is this industry led? Fear. Fear will kick in and everybody starts selling frantically. And because there's not enough liquidity, it's everyone on their own. It's the survival of the fittest now. Meanwhile, we've been focusing on the fundamentals. We don't have to deal with all that. We have so much liquidity and so much volume. Nobody's even thinking about exiting their position. Actually, people want to accumulate even more because there's so much USDC distributions going around for everyone. And this is the bottom line. This is just 1 day USDC distributions. Let's look at 1 month. So 30 million worth of USDC a month. That's not bad for a community. And another thing is, my brother Theo asked me one day, what do you think we need as far as community members to achieve 10 or 100 million in volume? Because our ecosystem is so efficient, we don't even need 1 million community members. If we can have 10,000, that's more than enough. 10,000 community members will do it. And even if we only have 100 million a day, even if it's 10 million a day, provided it's consistency, that's more than enough for our ecosystem, because it's so efficient. It can work with any consistent volume. It will do the same thing, just on a smaller scale. It will still burn, it will still retain liquidity. And as it's retaining liquidity, it will still grow in volume. And that's all we need. Liquidity will bring volume. And once volume comes in, we're set, we're good to go. So that's the moral of the story today, is that focus on the fundamentals. The underlying technology is the same for every one of us. We're all using the blockchain technology. We all can do everything that the blockchain technology offers us. Where we differ is in the fundamentals, the tokenomics, the strategies, the mechanisms, the ecosystem. What do they do? What added value do they bring? What challenges are they turning into opportunities? What opportunities is their platform addressing? Ask yourself these questions. Are you here for the technology or for a quick fix? Because if you say you're here for the technology, then hands down, we have the best supply fundamentals. We have the strongest tokenomics and fundamentals going into this bull cycle that is about to flood us with endless liquidity, because we identified that smart money focuses on retaining liquidity, right? We know that by now. They already achieved 1 billion in inflows in liquidity a day. And with that, your volume keeps increasing, endless. The sky is not even the limit. And this is the strategy, this is the blueprint that smart money has been applying for 2 months, and it's working perfectly. We've been applying for a whole year, but our name is not BlackRock. Our name is not Fidelity. So people are just not aware of our ecosystem. If they were aware and understood how these things work and how efficient our ecosystem is, we will take off how we were supposed to. And the timing is perfect because we're entering a wealth generating event, a liquidity driven event. And that's all we need. We need to retain it. Once we retain it, the volume will come naturally. And once that kicks in, we're off for the races. That's the bottom line. Focus on fundamentals. The underlying technology, everybody's the same, whether you are a dog with hat or you're called Bitcoin. The underlying technology is the same. The difference is the fundamentals, the strategies, the mechanisms. And this is where we stand out. This is where we are by far standing out. And this is what sets us apart in the industry. That's it for today, community. We've been going for 2 hours now, but I believe the message came across. Ask yourself this question. Are you in it for the technology? Are you in it for the quick fix? If you're in it for the technology, like you say, you should believe in the core values of the founder of Bitcoin and the blockchain technology. It should be fully peer-to-peer, from me to you. It should be fully not trusting third parties. This is not what's happening, because 10 people, 10 institutions are dominating the liquidity. If you dominate the liquidity, you dominate the asset, period. That's just a fact. And while they've accumulated 72 billion in 2 months, Bitcoin still sits at 1 billion after 15 years. This alone speaks volume. While they're focusing on the price going up, smart money is busy accumulating liquidity and is generating volume. And this volume is giving themselves and shareholders a good chunk. So Bitcoin is inefficient, it's unsustainable, and its focus is wrong. The fundamentals are wrong, and the ethos is wrong. This is not what Satoshi wanted. He wanted no third parties, and he wanted fully peer-to-peer, and not having to go through institutions to get your ETFs, a fake version. He wanted it to be decentralized, hold your own wallet. This is not the case with ETFs either. So this is what we do differently. And community tokens are the ones dominating the industry. And they will keep dominating throughout 2024, 2025, and in the future. And if you know that, don't you want to be part of a community that actually has fundamentals that will drive us beyond the boom cycle? This is a question that you can only answer yourself. I'm looking forward to coming back to you, community. As you know, today is our day 59. We are closely approaching day 60. Tomorrow we can start the countdown. And I just wanted I want to come back to you and check with you on whether you have any feedbacks, any questions that you have, follow-up questions. And as we go through these, let's ensure that we participate in today's tweeting event. Like I said, it plays a major role for us because it gives us the opportunity to discuss our ecosystem, discuss our industry, and build parallels. And this is very important for us, community. With that said, let me come back to you and check on you, see if there's anything that you added that you want us to discuss and break down as we are engaging with these tweets. And then this is how we're going to close out the session. I see Killer Whale is already out. BULLRUN is already out. Survivor is out. All three of them are out, community. Talking about efficiency. So efficiency is on par. We have efficiency in person. So this is great. All three are out already, community. As I see here, Queen Val already put them out as well. Survivor is out. Killer Whale is out. BULLRUN is out. So this is amazing, community. We're already efficiently here. Once more, I want to apologize for the outage. That I hope I wasn't gone too long and you are able to get the message after all. So let me come back to you, community, and check. what you have here. And please be sure to engage with these tweets. Let's ensure that we tackle them, retweet, like them, comment. Let us reach out. Let them reach everybody, that as many people as possible. As I'm going through these questions here. Okay. Here we are. Queen Resego says, greetings, Mama Awino, King Steve, and the kings and queens in the house. Greetings back to you as well, Queen. It's a pleasure having you in the community. Thank you very much for your feedback and for being part of this session today. Queen Margaret says, blessed day to you all, community. Hello, my Queen Mother, Mama Awino, and my brother Steve. Happy to be here. It's a pleasure having you here. It's always a pleasure having you here. Queen Margaret. We have Queen Lottie here as well. It's a pleasure having you here, Queen Lottie. She says, greetings, family. Another great day to sit down and listen to our King Steve as he delivers what he knows best. What a privilege we have as a community. Sit back and tighten your seatbelts. Thank you for your warm and kind words. I'm really humbled and flattered, but I have to give it back to you as well. I appreciate your inputs, your positive energy, your contributions to the community, and just your vibrant energy that is so contagious to all of us. You're very much appreciated as well. Thank you for your contributions, and we are pleased to have you in our community. We have Queen Patricia here as well. Welcome, Queen Patricia. Thank you for taking your time and being with us today. She says, good evening, family. I'm happy to be able to come and listen to our developer, Steve. Thank you, Steve, for your commitment. Stay blessed and protected always. Thank you so much for your blessings, for your kind words, encouragement. It's very much appreciated, Queen Patricia. And give it back to you as well. You are very much appreciated. Thank you for your contributions. Thank you just for your presence, for always showing up consistently and being present. It means a lot to us. You add a lot of value to the community by just your presence alone. So thank you very much as well. We have Queen Ndumi here as well. Welcome, Queen Ndumi. Thank you for also always being here with us on a consistent basis. We see you all over the social medias and on Zooms and everywhere. So we thank you also gracefully. Greetings, BRL family. So happy to be here. We are happy having you here as well. Queen Lati also says, we really have something that is solid. The magnitude of this project is beyond measure. This is, yes, and the moment, this is why there's always so much to talk about. You know, there's always so much to say about this project because it's just very sophisticated and it's forward thinking. It's long term. It's built to sustain us, to be stable, to be efficient, and to go beyond the bust and the boom cycle. And this is what it was developed to do, to address specific challenges. And this is exactly what sets us apart. Timing is key, community. And we put ourselves in a situation where we are going through the largest liquidity and wealth generating event in history of mankind. We are in an asset class that grows the fastest, more than any other asset class. And we are still at the very early stages where there's still so much room to grow. We looked at some use cases in logistics, in supply chain, in healthcare, in real estate, or generally in just assets, in tokenizations of assets. We're still looking forward for infrastructures such as SWIFT, payment systems like Visa, MasterCard, PayPal. They're still on their way to start using this technology. Banking systems, traditional financial industries, asset managers. I mean, it's just unbelievable. And we are in DeFi, which is the largest, as far as if you look at market cap, the largest industry in the space. And we are in it, and we are the most efficient. If you look at the mechanisms, if you look at the tokenomics, the efficiencies, we are market leaders by now. It takes us 30 days, just like it took ETFs 60 days to dominate the industry, it will take us 30 days to dominate DeFi. That's how efficient our ecosystem is. We've not gone through a bull market yet. So this bull market is going to put us to where we need to be. And like I showed you the chart, once your liquidity game is right, your volume game follows along. And that's beautiful because our volume is tied directly to the inefficiencies that everybody else is suffering from in the industry. So if our liquidity is right, our volume is right, and our volume is directly tied to the challenges that nobody seems to be addressing in the industry, but we are addressing through our volume, who will compete with us? Let the numbers speak for themselves as we're going through this amazing bull cycle, this amazing wealth generating event, because the blockchain technology is a money making machine, and you need to be part of an ecosystem that is fully equipped to just accumulate, sustain, be efficient, be stable, for the longevity. This is what you need to be part of right now, so that as we're going through this process, through this cycle, through this liquidity, through this volume rush, we can max out what we need to max out. And so this is it, community. What else is here? We have Queen Koleba also adding here, BULLRUN ecosystem is so unique and classic, a long-lasting project ever. Absolutely. Very well said, Queen Koleba. Very well said. This is very true. It's very true. And this is something we can really take pride in. And this is why we need to put the word out, because apparently a lot of people still don't get the memo, still don't see the vision, but it will come, like we say, with education, with time. And this is why we're so thrilled that smart money is entering the space on ETF level. They are using the basic 3 steps: accumulate liquidity. With liquidity comes volume. With volume comes revenue. Repeat, rinse, and repeat. Easy step. We've been doing that for over a year now. Because they're BlackRock, they're known, they have a name, they're regulated and all that. When they apply those fundamentals, it takes them 2 months. And you see it works. So same thing will apply to us. Once we go through this fast bull cycle, everybody will now see that it works. And that's when we will be laughing our way to the bank, because we'll be able to reposition ourselves already. So before this goes mainstream, we as a community, we've already been here for the technology. We're here for the technology. Everything else that comes along with the benefits of the technology, we'll embrace it, right? We'll embrace it. We won't say no to it. So again, the tweets are out. Survivor is out. Killer Whale is out. BULLRUN is out. Let's engage with them. Queen Doomy says, thank you, Brother Steve. Thank you as well, Queen Doomy. It's a pleasure. It was a pleasure having you all here. I'm always really looking forward to these sessions. I'm always very hyped, enthusiastic, and prepared to just have this dialogue with you. And yeah, looking forward to tomorrow. Tomorrow is day 60. Another very successful day, day 59. Think about this, community. 2 months tomorrow, 2 months of consistency. I have not seen a community this consistent for nothing. All the efforts, all the commitment will pay off, community. It will pay off, because the beautiful thing is, for us just being in the industry, all tides, all rising tides will raise all boats. But our boats is packed with fundamentals, tokenomics, sustainability, efficiency. So it will give us that extra boost on top of all tides being raised in the first place anyway. So we'll go beyond that. Brother Glenn says, I just want to say we are halfway to the $1 mark, and we haven't even gotten started with this book. You couldn't have said this any better. It's a fact. It's true. The way this bull cycle works is, believe it or not, and this is the scary part, scary in a good way, is that Bitcoin already hit all-time high before the real liquidity enters the space. Usually, Bitcoin doesn't hit all-time high until the money printer is turned on, and the Bitcoin halving is behind us. This cycle, because its sheer volume of liquidity and its promise of literally being the most massive bull cycle in the history of mankind, there'll be Netflix series about this cycle. There'll be history books written about this cycle. And don't be a sideliner looking in. Be a participant. Be part of it. Because your grandkids will ask you one day, what were you doing during this time? Why weren't you not part of this revolution, of this wealth generating event, of this liquidity rush? And you don't want to be looking down and not being able to answer your grandkids. So be part of this wealth generating event, of this amazing new digital economy that is an emerging market, has so much room for growth still, and that is the fastest and best performing asset class in the history of mankind. With that said, community, I see here two more comments. Queen Val says, let's all like and comment after the live, family. Put in facts about our ecosystem, our links, or hashtags. Well said, Queen Val. Thank you very much for your input. It's very much appreciated. My great brother Theo also says here, thank you for this absolutely epic session, my great brother. You good self are very, very much appreciated for this and all you continue to do for the entire community. Very humbled, my great brother Theo. I have a lot of respect of you. I enjoy and miss our great talks and conversations. I hope you and yours are in good health, that you're well. Thank you for your kind words. And you are just as much appreciated by all of us. And there is no better point than to wrap this up on this high note. I want to wish everybody a wonderful rest of their week. Thank you for participating in day 59. Thank you for your consistency, your persistency. Our slogan is success is all we know, literally, because we did that on a smart contract level. We developed something that is sustainable, efficient, and that addresses major challenges in the space using its volume that is driven by the liquidity that we're retaining. So we have the most comprehensive, sustainable, stable staking platform in the industry with an ecosystem built around it that is built for longevity. So we are thrilled to be part of this community. We are thrilled to have such individuals such as yourselves that are self-driven, informed, educated, inspired community. It's always a pleasure having these dialogues with you. We are very humbled to be part of this ecosystem and to have you as our family members, our friends, and our comrades as we go through these amazing bull cycles. Keep in mind, the hard part is behind us. We came out of the bear market. Now it's time to really just sit back and enjoy and just be active. That's all we need to do, just active. Let's not stop the momentum. Let's push even further. We only have to do this once. That's the beauty of bull run. Of a bull run. Just do it, go through it once, and that's it. Once you go through it once, it's more than enough. It's more than enough, especially this one. It's a great time to be alive, community, because this is when you really want to be part of cryptocurrency, is now. With that said, community, thank you for your engagement. Thank you for showing up. Thank you for your consistency. Thank you all that contributed and made the tweets possible, from the banners, from the wordings, from the retweeting. You all know who was involved, so you're all very much appreciated. Community, thank you for engaging with them. That's the least we can do to show our appreciation, and for the ones that put in so much effort and creativity to get all this accomplished. With that said, I want to wish everyone a wonderful rest of their day, and I'm looking forward for tomorrow, day 60. That's 2 months that we've been pushing consistency. Success is literally all we know because our actions have been speaking so loud we can't even hear what we are saying. So with that said, community, I want to wish everybody a wonderful rest of your week. I'm looking forward for tomorrow and also on Saturday. And I'll sit with Adam and we'll put out a note on Twitter when we'll do the AMA, so that we can get that also done and bring more awareness on his side, on his Twitter space as well. With that said, I want to wish everybody a wonderful rest of your day. Thank you so much for showing up, for engagement, for commitment, for consistency. Bye bye, everyone. Stay blessed, stay safe, and see you next time.